How much tax will you pay on $60,000 in the great state of Wisconsin? That's the question we'll answer here today at the Heritage Wealth Planning YouTube channel. So for those of you who are living in Wisconsin or thinking about living in Wisconsin and we're going to retire there, this is the episode for you. So by special request. So don't forget to subscribe down below and click the bell to be notified for future content. Now, frankly, I will have all 50 states. We'll do the all 50. So this guy just emailed me, said, could you do Wisconsin? I said, yeah, absolutely. I'll put you ahead of everybody else, but that's fine because ultimately I'll get to all 50 anyway. So excuse me. Don't forget to subscribe. All right, so let's dive right into it. You might hear some giggling children in the background, my friends. I have sleepover tonight, so my two sons have 3 of their friends over, so there's 5 young men in here who ages of 10 and 11. So they're right there on the front porch outside playing tag, playing football. So if you hear them in the background, hey, it's part of the life of being Heritage Wealth Planning. That's the life we live. So love it and always be grateful for what you got. So let's dive right into this. All right, so as always, you go to heritagewealthplanning.com, tax tools, interactive tax page. All right, so you go to interactive tax or tax tools and interactive tax page, and you'll come up to the federal tax interactive tool from taxfoundation.org, and then you scroll on down to state tax tools, and you'll see the smartasset.com gives you a map of the USA, and we're going to go to Wisconsin, and I have a sneaky suspicion we're not going to like what we find, but let's go ahead and dive into this, my friends. And so, as always, we start with $20,000 of Social Security income, and we're going to change that to $40,000 of IRA income. And we're married, filing jointly, and we're born in 1952 in order to get the $26,600 in standard deduction. And I always forget my notepad, so I got to write this down because I'm taking it for my book I'll be doing. And in Wisconsin, you pay $1,100 in state. And of course, you pay $2,871 in Fed. So in Wisconsin, you pay $1,105 in state income tax on that right there. So that's not great. That's one of the worst I've seen so far, frankly. So let's now change it around. We're going to go to $40,000 of Social Security and $20,000 of IRA income. And oh wait, that's not. I think I have a pension still in there. No, I don't. Okay, there we go. Good. All right, so $20,000 of IRA income, and here you pay $4 in Wisconsin. So again, the big difference between the two, if you have high Social Security and low IRA, you basically don't pay any tax. You don't pay anything to the feds. You pay $4 for the state. If you just swap those around, your taxes go to about $4,000. So I mean, that's a big flipping deal if you're retired on $60,000 a year. I mean, think about it. $60,000 a year, that's 6.7% of your income you're losing to taxes just to the feds in the state of Wisconsin, depending on how your income comes in. And as always, just remember, you go through the provisional income, and I'll probably do this on every episode just in case someone only catches this one. So figure out how much our Social Security or how much we have to pay tax, we have to first figure out what our provisional income is, which determines how much of our Social Security is subject to taxation. And provisional income is 1/2 Social Security plus all other income. All right, so 1/2 Social Security plus all other income. That's your provisional income. All right, yep, there you go. And so here, let me get my trusty eraser. We have $40,000 of IRA income and $20,000 of Social Security. So we have $40,000 of IRA income. And we take half of our Social Security, so $10,000 of Social Security. Now, I always want to throw the caveat in there. If you have tax-exempt interest, that is included in your provisional income numbers. Thus, your tax-exempt interest can make your Social Security subject to taxation, just FYI. So now we got $50,000 of provisional income because we have the $40,000 IRA and half our Social Security, $50,000 provisional income. From 0 to 32 is nothing. So you don't pay any tax on the first $32,000 of provisional income. The next amount from 32 to 44, half of that is taxed. And so we have $12,000 in this case because we have $50,000 total. So the first 32 is not subject to tax. The next 12,000 is subject. 50% of that will be taxable as income. And then anything above 44% is 44,000. 85% of the amount is subject to tax, and that's $6,000 because we have 50,000 subtract 44,000. That gives us $6,000 times 85%. And that's going to be $5,100. So of our $20,000 in Social Security, $11,100 is subject to income tax. All right, so that's what we have so far. So now what we do is we take that $11,100, we add that to our $40,000 of IRA distributions, and $11,100 is taxable Social Security, $40,000 of IRA distributions equals $51,100. And adjusted gross income, that's what we got so far. We subtract our $26,600 for standard deduction. We got 24,000, I forgot what it was, 24,000 something, 600, something like that. Off the top of my head, I don't remember, but it's 24,000. I guess I take my trusty calculator right here. We got 51,100 minus 26,600. 24,500 is what it was. Yeah, I don't know why I was getting 600 there. 24,500 is our taxable income. All right, so the first 19,000 of that 24,500 is subject to 10% income tax, and anything above that up until 77,800 is subject to 12%. And that's why you get significant taxes on higher IRA distributions to lower Social Security versus the other way around. All right, so let's dive into it and find out where the cheapest places are in Wisconsin to retire. And let's see what we got here. And this is what makes Smart Assets so wonderful, because they're literally running scenarios on each town in the state of Wisconsin, and they're running it based on property tax, income tax, sales tax, and fuel tax. I mean, it's just fantastic. So in the state of Wisconsin, as all the other 49 states, they break it down for us in terms of the cheapest places to live from a tax perspective in the state of Wisconsin. And what we find here, and they'll show us a visual here in just a second, so you can see right around here in the southeast part is the most tax favorable. Here is, what is this right here? That's Polk, Wisconsin, and then that's Rusk, Wisconsin. Know anything about them, but so these are the ones down here, which is Sheboygan, Waukesha, something like that, Dane. So I don't know anything about that. But anyway, I don't know anything about Wisconsin. I've only been there one time. That's just a brief excursion up here, just to say I've been there. So only my brother and I went through for a half hour, just say, all right, we've been to Wisconsin. So I don't know anything about it. It looks like a beautiful state. All right, so let's look at Pewaukee, Wisconsin. Your income tax paid there. Now, this is a different scenario. This is somebody who's a retired age, but is making $15,000 on Social Security, $15,000 IRA distributions, $10,000 from a pension, and $10,000 from W-2 earned income. And this person is paying $7,000 in income tax, a 1.52% property tax. Oy. And how they get their property tax numbers is they take the median property tax per every single house and every single taxpayer in that town, divides by the median property value, and that's going to get your 1.52% property tax rate on top of the sales tax rate of $752, fuel tax rate of $325. Now they aren't taxing Social Security. Retirement tax friendliness in Wisconsin. This is the fourth best town in Wisconsin. Is only 20.51%. Wisconsin is one of the worst states for retirees across the board. I mean, look at that. Just getting hammered there. I don't know. I mean, man, I don't know how you guys do it up there, because that's the best place is Mequon, Wisconsin. 21.88 is the best. Now, Alaska is 97. Where was I just doing right the other day? I can't remember, but some, man, drawing a blank. Delaware is like 78. I just look at that. I mean, that's not good. So South Carolina is 77. I mean, Alabama's 55. But that's just among the worst out there for sure. Now, we haven't hit Massachusetts yet because I'm not going alphabetical order, but Massachusetts can be better. I just know the way around that. Well, it'd be interesting to see about New Jersey because of high property tax, but New Jersey on the income side is nothing. For this scenario here. So with someone making less than six figures. So anyway, there you go. That's your nutshell, Wisconsin. It ain't pretty. No other way around that. And, hey, I don't know anything about the state. I know it's a beautiful state. without question. But from tax perspective, you guys can do better than that for sure. So, all right. So as always, don't forget to subscribe. And if you do subscribe, hit the bell to be notified for future content. Thumbs up always help. Comments. If you're on the boots on the ground in Wisconsin and you have some thoughts on this, man, I'd love to hear it. So we'll see you next time at the Heritage Wealth Planning YouTube channel. Thanks, guys.